Hello, everyone. Thanks for tuning in. If you're on my VIP list and you're receiving my free trade signals, I'm going to send you a currency strength indicator. It's the one I use. It helps to have this tool so you can determine the strength or weakness of individual currencies. The overall idea is to trade the strong versus the weak in the direction of the overall trend. Your trading results will improve when you use this indicator along with other tools. Now, this indicator does give you quite a bit of information and will help you create a watch list of currency pairs for you to consider. We'll also review this past week's trade signals and see what we can learn from them. We always want to learn from the past and prepare ourselves for the future. So, this video is how to use a currency strength indicator. Okay, you can see me here. My name is Martin, and I'm a proud Canadian trader, guys. Been trading for quite a number of years and started this free signals program about 7 months ago, doing exceptionally well. So again, if you want to receive my free signals, there's no obligation. There's nothing to buy, guys. All you have to do is send me your email address to right here, mskyj007@gmail.com. Okay, now I have more information on this a little bit later. So before we look at this past week's trade signals, and we're going to look at the charts, I'm going to show you the entries, the stop loss, the take profit levels, and so on. I just want you to either pause the video and read this. And the most important thing, it's an educational program I'm providing you. It's up to you to not take any specific trades if you don't want to. I'm not giving you any specific advice. I'm just trying to teach you how to trade correctly, okay? And finally, it's your responsibility to evaluate the relevance of my advice and content. So if you're losing money, you're just not paying attention to what I'm telling you. And guys, always risk. When you're trading, always risk with the maximum 1% of your account balance per trade, okay? So let's get going right to what happened this previous week. There were 3 trade signals I sent to you, and I do send them by email. So that's why you have to give me your email address, guys. It's the only way I do this, okay? So on May the 17th, I issued a buy trade signal, buy British pound, Swiss franc. It was a loss. It was closed. It went against us. It did not hit our stop loss, but we closed the trade well in advance of that. And we lost approximately 64 pips. On May 18th, I issued another signal, buy Swiss franc JPY, the Japanese yen. It's currently still open, and keep it open for the beginning of this week. I expect this price to go into profit, so let's see what happens, okay? Then on May 19th, I issued another buy signal. It was the buy USD Japanese yen. Again, it was a loss. It went against us, and I mentioned a few days later just to watch to see if this price reverses again in our favor, but to close the trade anyways, okay? But just close it with less, reducing your loss, okay? Now, we'll go over the chart in just a moment. So this was a loss of approximately 30 pips. The total lost pips in this previous week was about 94 pips, but the previous week before that was a huge monster week, guys. So over the last 2 weeks, even factoring in these 2 losses, we're still up just over in the last 2 weeks, up 479 pips. So all in all, we're still doing really well. And I guess the main thing I want you to understand and take away from this video, guys, look at the big picture. Don't look at one specific loss or 1 or 2 losses. Look at the big picture. See how well we've done over the past 7 months, guys. I expect it to go really well in the future as well. So just stay positive, okay? And that's the real message in this video. Now, let's take a look at the first signal I sent out. Is the buy British pound, Swiss franc, guys. And you can see This was on May the 17th, okay? And right here, here's the signal, okay? You can see that right there. There's the signal. It's a buy British pound. Now, at that particular time, the British pound was strong. The Swiss franc was weak, but I'll show you a little bit later in this video what happened since, as far as the currency meter that we are using. And it shows that you really can't predict the markets. Anything can happen at any time. And the only people that control, the only organization that control the markets are the big banks, okay? So here we got in, guys. This is our, you can see right here, this was, okay, so we got in right there. There was our entry, 1.2768, guys. Here is the first profit target. Price never went up to our first profit target. It reversed. You can see right here on this day, on the final day, okay, it actually reversed lower with this black candle, but never. Here's our original stop loss, so it never did go down to our original stop loss, and that's great, guys. We closed the trade. And we didn't lose a lot. Okay, so we managed our trade by managing our risk, and this is exactly what happened. Okay, so let me just take that off, and let's get on to the next chart. I did issue a buy Swiss franc JPY on, you can see right here, May the 18th. Okay, and here is the signal. Let me get my my drawing tool. So okay, right there. Okay, it was a buy trade. At this particular time, the Swiss franc was strong, and the Japanese yen was weak. So I issued a buy trade. There is our just let me get the drawing tool here. Here is our entry. You can see right there at the close of this candle. We're trading on the daily candles, guys. Okay. And the daily candle closes each day, New York. Oh, it's New York, 5 p.m. Eastern Standard Time, okay? And that was your entry, 121.27. This was our first profit target up here. And again, guys, you can see price just wouldn't go higher. And in fact, let me just take that off. So over the next day after I issued the signal, price went down. But I issued a statement, an email, and I always send out emails with updates on what you should be doing, because this is exactly what I'm doing. I said, don't close a trade even though it went against us. Keep the trade open and look at that on the next day. It went up again, and our final trading day of this past week right here, price has gone up, and I believe just above the 121. So at the beginning of this week, I expect price to still go higher, okay, and we'll just have to wait and see. Have some patience, guys. That's what trading is all about. We're trading on the daily charts. We're not intraday trading or scalping, okay, and I do expect this to go higher as once we can break this resistance area right there. Okay, so let's take a look at the next trade and the final trade of the week, guys, right here. Okay, I sent out an email letting you know to buy the USD versus the Japanese yen, guys. Let me just show you the signal. Okay, and here's the signal right here at the candle, at the close of this candle. This was our entry, okay, right there, guys. So there is our entry. And by the way, all the information on a trade, when I send out an email, this is an exact copy of the email with the data on it. So all you have to do is follow my instructions, guys. And it tells you right here that our entry is 109.19 right there. Okay, so we entered there, but you can see right away the next day price went right down with this black candle. Okay, and because it went below this main, I call this the main DTL line. Okay, it's a moving average here. It went below again, so close your trade automatically. Again, you can see did not hit our stop loss, our original stop loss, and in fact, the next day or the day prior or the day after this, I sent out another email update saying that watch this trade. You can close it now, but if you watch it going higher, close it when it's gone much higher, but still basically telling everyone to close the trade. So it went all the way up to here, guys, okay, with this candle. And a lot of people closed the trade, only limiting their loss to about 30 pips or so. So again, we limited our loss. We do have a risk management plan in place, guys. And it's so important when things are not going well. The number one thing you have to do is always follow and adhere to your risk management plan. Okay, that is super important. Okay, let's get on with our lesson now. Last week I mentioned that I do when I go over my analysis before sending out the signal, I have a notebook right beside my computer. This was from May 11th, you can see, but every day I fill in the notes just like this, and I go through a series of analysis. And today we're going to talk about creating a watch list using the currency strength indicator along with other tools. Now, the currency strength indicator, and that's right here. Okay, so there's my analysis using these currency strength indicator. I'm going to be sending that out in the next email to you. Okay, I was going to do that a few days ago, didn't have the time, but I'll be doing that with my next email, so you'll actually get the indicator that you can actually apply on your MetaTrader charts. Okay, so let's keep going, and let's look at this. Now, here is the visual representation of the indicator I'm using. I believe it's called the currency strength lines indicator. Okay, and each line here, it's color coded. It coincides with the individual currency. So we're looking at the strength or weakness of individual currencies, not currency pairs. Okay, so you can see with this line right on top, that is the CAD. Okay, that is the CAD right there, and you can see that. Then here, this blue line. Okay, this blue line, it's the light blue line, is the British pound. The darker blue line, you can see all rising all the way from here and ending up right there. That is the euro. The red line here is the USD. Okay, the Japanese yen is the pink line here. You can see that up here. Audi is kind of the orangey line right here. Okay, the New Zealand is yellow. Hopefully you can see that. That's this one right here. That's the New Zealand dollar. Okay, so the very first thing we do, and this is the first thing that you can do, find the strong currencies that are rising in strength. Find the weak currencies that are falling. Now, when I say rising, this is what I mean. This is the euro. Follow this, guys. Okay, see how this line is rising? Okay, that is the euro. Okay, now an example of a falling currency, you can take a look right here. This yellow currency, which is New Zealand, okay, you see it's come down, retraced a bit, came down, and it's kind of going sideways here. Okay, so that's the New Zealand dollar. And another falling currency would be basically the Australian dollar. You can see the Australian dollar starts here. It's the orangey one, right? Okay, can you see it, right? Okay, and you see how it's falling, rising a little bit now, but basically still right here at this point lower than right there. Okay, so that's what I mean by falling and rising lines. That's what you got to look for. And I want to take a look at this example, guys. Here's a good example. One way you can trade using the currency meter, okay? I want you to look at the CADJPY from 4 days ago, okay? The CAD is falling while JPY, Japanese yen, is rising. So, is the sell CADJPY a good pair? I'm going to show you the chart in just a second. So let's go back 4 days. 1, 2, 3, 4. Okay, so we're looking for the CAD, which is this line. You see from here, CAD went down. Okay, so it's falling, right? That means losing strength. The Japanese yen right here in the pink, you see it's rising, okay? Okay, falling, and the Japanese yen is getting stronger. So, and the way the pair is, the first name in this pair is the CADJPY. So we want to basically sell the CAD versus the Japanese yen. And the question is this a good pair to trade? And this was from 4 days ago. Okay, so that we've determined that the CADJPY, the sell CADJPY might be a good opportunity for sell trade. We look at the charts, guys, and take a look. Go back 4 days, okay? And you can see 1, 2, 3, 4. So you see, first of all, we're in an uptrend, okay? Remember, we were talking about a possible sell CAD JPY, right? Because CAD was weak and the Japanese yen was strong. So we're looking for a sell trade, right? And this is 4 days ago. But look, we're in an uptrend, okay, right away. And you can see this is a bearish candle. And so right off the bat, okay, let me just get the tool here. See, because we're in an uptrend, right? We cannot take this trade. It's not suitable to be on our watch list. So in this case, no. We look generally for signals in the same direction as the overall trend, not reversal trades. And if we were to take a sell trade, that is a reversal trade. You see, we would have been maybe up here, and then price is now again going in our overall direction. So this would have been a bad trade, and this is so it's important to understand the currency meter, okay, works fantastic, but you also now have to go back to your charts and determine if there's a signal or if price is going in our general direction, because we're trend traders, okay? So that is that, and let's get to the next example, okay? Now, remember, we're looking for currency pairs to trade that we can put in our watch list or keep an eye on. Here's another example. I want you to take a look at the British pound AUD, British pound versus the Australian dollar 5 days ago, and that was at the beginning of this the new trading week. Okay, so 5 days ago, let's take a look. So here is 1, 2, 3, 4, 5. Okay, we're talking the space between these the vertical dotted lines. Okay, so the space between represents 1 day. Okay, so we're going back 5 days. Let's take a look at the beginning of this trading week, and we're looking at the British pound. British pound is the light blue, guys, here, right? So you can see it went down, and then on this day, at the end of this day, because we only take trade signals at the end of each trading day, you see, it was rising, so gaining in strength. Now, the Australian dollar, same thing, okay? This is an orange, so the day before was going up, but then during like on the 5th day back, okay, you can see it was falling. So the Australian dollar was falling, losing strength. The British pound was gaining in strength. Okay, and this is at the end of the day, so you always wait till the close of the candle. So basically, we want to take a buy British pound Australian dollar, right? We're buying the strong against the weak. Okay, so let's take a look at the charts and actually see what happened. And let's take a look. So here we go. British pound Australian dollar. Let's go to 5 days previous. 1, 2, 3, 4, 5. Okay, guys, there's a signal. Okay, there's a signal, and even if you didn't have a signal on your charts, price went up. It's coming back down, retracing, but then we have a bullish candle, okay, and expecting price to go higher. In my charts, I do have signals, and we'll be giving you that more of that information later. Okay, so you can see we open a trade right here. It's the buy British pound Australian dollar at the close of this candle or at the beginning of that one. We watch price go up, and guys, this would have been a terrific trade for many reasons. One, it's trending higher. You can see there's an uptrend, okay? So it's a very good trade. And unfortunately, guys, I missed this signal myself. I didn't send it out to you, so it's, I can't see everything, and sometimes I miss really good trading opportunities like this one. So this would have been a really good winner, guys. This would have been an excellent trade. Okay, so let's continue with our lesson on using the currency pair. Now, the second way to use the currency lines tool here is, here's the second way. You want to find currencies that are crossing paths. Okay, crossing paths. Take a look 3 days ago here. The USD is rising. So let's find the USD first of all. USD is in red. Okay, so 3 days ago. 1, 2, 3. So here you see at the end of the day, look at the strength and the angle. I look at the angles as well, guys. If it's a very steep angle, that means it's unusually strong that day. So the US was rising in strength. And then I'm looking at the Japanese yen and AUD, the Australian dollar, both are falling. Okay, so here is the here's the US. Here is the Australian dollar. See how it crossed and it's falling. Okay, and then right here is the Japanese yen, and it also crossed. The Japanese yen did not cross the path. Okay, so that's a possible reason why the trade did not work out. But anyways, I did mention buy USD Japanese yen. Okay, and that was an actual signal I sent out. And then here you can see the crossing, the Australian dollar versus the US. So Australian dollar getting weaker, the USD getting stronger. So what we want to do is sell AUD against USD, because in this pair, AUD is the first name in the pair. Okay, so let's get right to the charts and see what happened. Okay, and here we go. So you can see the buy USD, that was a trade signal. The entry was, let me just get the chart. So right here, here's the signal. And take a look at this candle, guys. I explained this in an email to you. This is what I call an outside candle. The low of the candle and the high of the candle completely engulfs the previous candle. So it's not just an engulfing candle, it's an outside candle, which is actually a very good indicator of a further bullish move. But you can see right away the next day, price went down completely reversed below the DTL line, and I issued a sell, right? Either a sell here or wait for price to go higher. Many of you did and got out right there. But once the candle crosses and reverses below the DTL from our price direction, we need to close the trade, because we don't know. From here, price may still continue going down further, and then what? We're making excuses why we stayed in the trade too long. So that is one of the rules in our trading success. Okay, and of course this trade failed. The Audi USD, that was an actual cross pattern, guys, and this was a failed trade as well. Look, here is the sell right here. See this big black candle? Okay, so those are the signals. Sell Audi USD 3 days ago, 1, 2, 3. Okay, and we would have gotten in there, but you can see right away the next day completely reversed and again crossed over the DTL line. So again, we would have closed the trade right there. Now, why do these happen? Now, and take a look. Like I said, the markets sometimes are very erratic. We cannot predict the markets, and the currency meter that we're using is not an absolute 100% successful type of indicator. It just helps us understand the strength or weakness, but at the same time, the people that control the markets are the big banks, and guess what? They, after a very good valid sell signal, especially here, take a look, previous big huge bearish candle. I mean, that is kind of a mother candle showing that price should be going down further, right? And instead it went up the next day, crossed our DTLs. So I stopped the trade. It did not go up to our stop loss, which is good. So we minimized the risk. And again, on the final trading day, take a look, guys, right here. We have another bearish candle. So from here, could price be going down further? Well, we'll have to wait and see at the beginning of this week. But again, up, down, up, down, complete sideways mess. Okay, so again, we have to just bear with it and go on to the next trade signal. And again, there's, like I said, there's an overall lesson to this as well. And let's take a look at one more thing. And here it is, guys. The last 4 trading days reveal a converging pattern overall, resulting in a difficult trading week. So take a look at this. See how all the lines, all the different individual currencies converge together? And go back to 1, 2, 3 days. It started about 3 days ago. Look at that. So there is the euro, there is the Canadian dollar, and there is the Swiss franc in green. Okay, and then take a look right here. Look, they're spread apart, and then they all converged again together. The Audis may be gaining a bit of strength. There's minor strength in the Audi, but take a look, converging together. And this is the problem sometimes. At certain times, there's no justified cause why price does this type of thing. It's sideways markets, and the banks are controlling this. And sometimes what we think are very good trades with good signals, good entries, and everything else just doesn't work in our favor. So what can we do, right? That is really the next one. Okay, so this is what we have to do. There are 2 losing trades this week, and what can you do next? Well, we have to, and you have to, trade mentally strong, guys. This is the key right here, and we all go back to what makes us successful in Forex trading. It's all about our mindset, our patience, and and not doing anything erratic. So keep doing the same thing that got us here. We're successful so far, but you've got to really keep mentally strong. So the first thing is you have to accept losses. If you want to trade Forex or any markets, okay? And again, what about the people who are trading Bitcoin or holding on to Bitcoin, hoping Bitcoin will go up to 80, 90, $100,000? Well, it's completely dropped, right? So you have to accept losses. Next, you have to trade with the correct lot size, the acceptable correct lot size. So either use the tool, the free tool I sent out to you, most of you already, to put the position size indicator, okay? And again, just to keep things simple, most of you should be trading with 1 micro lot while we're in phase 2 of our live trading. The people who have larger accounts, guys, you can trade with a little bit more if you want 1 to 2%, but still, for each trade you take, a maximum of 1%, and there are 3 trades this week, so that means, and I think I gave instructions before, if we have 2 trades that have not closed yet in profit or whatever, then you should not take the 3rd trade. You want to keep your maximum risk factor to basically 2%, okay? Next, stay positive. I don't know if, after 1 losing trade or 2 losing trades, do you guys lose hope? Do you guys kind of, think that more bad stuff is going to happen? Absolutely not. You always have to stay focused, stay positive, always. Next, look at the big picture. Again, look at the overall big picture over the last 2 weeks, the last month, the last 3 months, the last 7 months, if you've been with me that long, right? And always keep that in check and understand it's the big picture that we're looking at, and stop thinking about the odd loss here and there, okay? So that's really important part of staying focused and positive. Next, don't change your winning strategy just because there's 1 or 2 losing trades, right? We're on a winning strategy. We have everything in check. We have a management risk system and a plan to keep us from losing even more pips. So guys, don't change anything. And finally, and I have kept telling you all along, trust and follow the process. Trust and follow the process. Take the trade signals that I send you, and everything will be okay. So, finally, especially for the new subscribers, if you want my free trade signals, send me your email address. You've got to send me your email address with your name, guys. I repeat, you know, I need your first name so I know who I'm dealing with, okay? And there's nothing to buy. There's no credit card information. So send me your email address and I'll put you on my VIP list for you to receive all my free trade signals. Send it right here. This is my email address to mskyj007 at gmail.com. Okay, so mskyj007 at gmail.com. Okay, so send it right there, guys, and I'll be very happy to put you on my VIP list. And as always, I'm going to close off with a big cheers from Canada. Everyone stay safe, be happy, you know, especially when it comes to your family and your loved ones. And stay tuned to next week's video. That's it. Please subscribe if you're new. Send me a comment, and really, guys, I would appreciate this. Just hit the like button if you like this video, and there's more like this to come. Okay, so take care, and we'll talk to you again.